Hello and welcome back to ClearCast, the real estate fintech podcast. My name is Jeff Allen. I'm joined as always by my friend and colleague, Kenon. Chen, Kenon, how are you?
Hello, Jeff. I salute you.
Most people listening are just listening on audio. They're not seeing the video. So when you're just very silent and like saluting me, that feels good to me. To be clear, I loved it. But the listeners are not seeing that.
Gotcha. I thought like everything is about video these days, like all about the video, short videos for social media, YouTube, which like we're really hip on that stuff. So I just thought that that's what was going on, but
I get it.
I'm
You were
sorry.
trying to kind of like take us into the next millennium, but this is more of an old school podcast with so
Gotcha. Okay. All right. So I should dial back my lingo.
dial back lingo a bit. Yes,
Gotcha.
exactly. Try and tone it down and think about the age of your audience, if you would, please.
Gotcha. Okay.
All right, so this is going to be a fun one. Episode 32. We are going to be joined by our longtime friend, Josh Jensen, who is the co-founder and CEO of Inspectify. Are you excited for that?
Did you say we're at episode 32?
I did.
That means that our ClearCast pod is about at that first-time homebuyer age.
You're right. Right.
It's getting right there to that.
You're absolutely right. And, so that's actually a good transition for us to talk about what a terrible time it is to be a first-time homebuyer.
Our pod is stressing out right now.
So let's get into some news. We're going to start with some bad series of news points, but then we're going to end it with some positive series of news points. Okay. So, let's talk first about the bad news, and that is the real estate market. Okay, Zillow just released their October 2022 market report, and new listings, so the number of new houses hitting the market, is actually down almost 25% from a year ago. Wow.
Wow.
How did that sound come from? That's crazy. So
this is terrible. This is terrible. Okay.
It is terrible news. I agree with you.
Yeah.
The trombone music confirmed it. So sellers and buyers alike hunkering down, avoiding high interest rates. Obviously, a lot of sellers are, they're at risk of losing out on their existing low interest rates, so they're staying put. The problem is that restricts supply, which means prices don't have a chance to come down and counteract what's going on with mortgage rates. And for buyers, affordability is a concern. The average monthly mortgage payment has increased 77% from October of last year and 107% from 2019.
Like, how many times are we going to have to hear that?
I'm sorry, hear what? I'm not familiar with it. Okay, I'm just reading this.
See, for our listeners, no one prepares me for this stuff. It just happens to me.
So let's put this in further context. Let's think about the wallet share, the share of a first-time home buyer's wallet. Share of income spent on monthly mortgage payments in February was only 27.7% on average. And now in October, with what's going on with mortgage rates, it's shot up to 37.3%. Wow. So housing payments are considered a financial burden when they exceed 30% of a household's income. So we're there. Hey, this is a lot of bad news, Kenon. What do we make?
Obviously, this isn't a surprise to people that are listening to this. I think the other confirming report we've heard is that people that have new homes under contract, are having to bow out of their contracts and losing their deposits. So we're hearing about families losing out $10,000-$20,000. They're having to walk away because of this change in the monthly payment, and then they're unable to proceed forward. So, housing affordability is a huge concern. And when we talk about affordability as well, I think we're talking about two things that are difficult. One is that how home prices have stayed high, and so the cash you have to bring to the table is quite a bit higher than a couple years ago. But then also, of course, your monthly payment. So it's a double whammy. But maybe there's some form of relief in the fact that we're seeing less competition for listings that are out there. So we're not seeing as much of those bidding wars and other things. And we're seeing list prices start to correct a lot more price drops happening. So that's a bit of good news, right? That you're at least on top of this, you're not dealing with all these crazy, bid up situations.
For sure. For sure, that's a glimmer of hope. But you're right. I shouldn't be making flippant sound effects. There is obviously a serious affordability impact from what we're seeing here. The fact that mortgage rates have gone up as much as they have, combined with the fact that there hasn't been any pricing pressure relief yet. And the share of home buyers who are first-time home buyers is pretty low right now. We don't have that stat handy, but I've seen it recently. And those are the people who drive, dynamic change in the market. So definitely something for us to monitor. But let's talk about a little good news, shall we?
Oh, good. Do we have a sound effect for good news?
No.
Oh.
Um,
we only work hard to accentuate bad news here on ClearCast.
You wouldn't want to do
Great.
that. Small glimmer of good news. Last week, the 30-year fixed rate mortgage went down from 7.08% all the way down to, where is it? 6.61%. Hey, that's good news sound.
Is it? You used your.
That's good. Okay, that's good news. All right, so that is the biggest single day drop in mortgage rates since the 1980s. That's pretty good.
It was good news until I heard the sound, and now it really tarnishes the good news.
Sorry. Decline is the result of incoming data that suggests inflation may have peaked. Now, it's obviously a little too early for us to say we're back to a 3% mortgage rate environment. And frankly, maybe that's not healthy either. But certainly, given all the affordability concerns we were just talking about, this is some positive news. What do you think?
Well, I think the cool part about this is that what we saw was a complementary spike in loan applications as well. So as soon as it did that, there was a huge spike of loan applications that came in, which tells us that there's still demand. So that's super cool that there's people that are ready to go, that are waiting for the right moment to jump in. And as soon as they see, a potential advantage, they're jumping on it. So the demand is still there. It's just a question of, will people get a bit used to, higher rates? Is the 6% range, if it's able to stabilize there, is that enough? But I think the first half of the next year is going to really be telling, to see if we can we can stabilize, see continued good news around inflation, see the Fed back off a bit on the rate increases, and then if there's demand that's there, maybe 2023 could be better than we think. That would be super cool.
That would be.
What's not super cool though? What is that sound effect?
Are you sure?
Yeah, I'm pretty sure.
I had a lot of options to choose from as I prepped for this. Do you want to hear another one?
That's even scarier to me, that's the one you selected. I take it back. Actually, your selection was better.
Or what do you think of that one?
It's a good thing we don't have advertisers for this pod, because we would have just lost our advertising even faster than Twitter.
You're right, and I actually think this is the reason we don't have advertisers. Is I'm sorry, Kenon, you're trying to be professional, and I'm just messing it all up. But anyways, good to end on some good news. Obviously, we'll keep monitoring what's happening, rates, and hopefully we can see some of these affordability concerns start to ease. And in the meantime, I'll keep looking for new trombone samples.
I can't wait. Really, it's always something new with you, and I can't wait to see what's next. All right. Well, after that rousing introduction and news story, we are super excited. I'm very excited to move on to the next section of the pod, and and we are thankful to have with us today Josh Jensen, who is the CEO and co-founder of Inspectify. Inspectify is changing how homeowners evaluate their homes through a tech-driven property inspection platform. So they're bringing technology to the home inspection world, and they're working across multiple industries, including residential real estate, single-family rentals. Josh, thank you for being on the pod.
Excited to be here. Thanks for having me. And that's a great intro. I don't know where you found that blurb. I don't think I gave it to you, so great work on that.
Well, apparently we're doing marketing for you now. So you didn't know, but you already signed the contract, and we've been working on a couple things. But no, we've known Josh for a couple years now, and excited to chat. But this is like we get to have a formal intro now to what you do. So tell the people a little bit about Inspectify. How did this thing start, and what is it that you're really trying to do?
Yeah, so I'll give you a crash course in my background and then how that dovetails into Inspectify. So I've been in technology for 7 or 8 years. I worked for a couple of early stage companies. Most recently was a company called Fly Homes, which was one of the first power buyers here based in Seattle. But outside of that, I've been in real estate for about 15 years. I've had this side hustle that all the cool kids call it house hacking now. I did this like 15 years ago, where you like buy a house, you live in it, you renovate it, and then you sell it to avoid capital gains. Like, apparently this is called house hacking now, but I did this 15 years ago. And so I jumped into real estate. I did my first flip, I sold it, paid for business school. I kept doing it over and over. And, the last decade, my wife and I probably bought and sold over 50 homes. So, have worn many hats around the transaction, around managing homes, owning homes, and all that fun stuff. So obviously, great connection into inspections. I think the impetus around Inspectify, and I've told the story a couple of times, is when my wife and I bought our first house together. This was in Boston, Massachusetts in 2014. And at the time, the market was pretty crazy, like multiple offers per home. And the seller, in their genius thought, had everybody do their inspections on the same day. And so we all showed up on a cold Saturday morning in Boston to do our inspections. And it was this perfect benchmark of the quality of different inspectors, right? Because we're all kind of went at the same time. And we're wrapping up my inspection. And I looked at my inspector. I was like, well, what'd you think of the roof? Is it in good shape? Is there any issues with it? And he's like, oh, I don't inspect roofs. It's not part of my protocol. And I'm sitting there watching other inspectors who have ladders that are going up on the roof. And I'm just like, what is this sham that is spent $400 on? And so, this idea of driving standardization in the process, driving a higher quality output, it was really the initial idea around Inspectify. But as we've dug into it, I think the part that gets me most excited is, if you think about the residential home inspection, it's by far the most complex and comprehensive data set that exists on homes today. And because of the non-standardization, because of the fragmentation that comes with it, there's really no utility in that besides that one in time, make a decision, green light, red light on the home, right? And so if you can start to figure out how that data could be fed into other parts of the transaction and after the transaction, there's a really cool world that makes homes much more digital and much less analogous. So that's the high level.
Love that. And property data standardization is obviously something very near and dear to our hearts on this show. Let's come back to that. I want to dig in a little bit further on that first pain point, though. You know, you had the appraiser show up, and, or sorry, I'm so used to dissing on teasing. I love appraisers. I love appraisers. You had the inspector show up, and the inspector was doing a completely different type of inspection than it looked like the other people were doing. Is that pretty common then? Is that sort of the standard today, that every inspector chooses their own scope and does their own thing? Like, give us a kind of a home inspection download quick, if you can.
Yeah, and so there's a couple things. One, every state thinks about it differently, right? Within the United States, only 37 of them actually have some form of regulation, and it's different for each one, right? But you have 13 in the country, including the great state of California, where there's zero regulation. So any person off the street can market themselves as a home inspector, which is a little scary when you're buying $1 million house, right? But even within the states that are regulated, there's general guidance on what they should be looking for and how, but like there's no requirement, there's no hard requirement upon that. And so even the states that are most regulated, like the state of Texas, which is probably the most regulated, there are some constraints on how they do it, but by and large, they can interpret the law in their own way, because it's very, very vaguely put together. So this is pretty common. I mean, like if you talk to real estate agents, you know, the home inspection is by far the largest source of the stress and anxiety, maybe next to the appraisal coming in, to get back to your guys' world. But the main reason why is it's kind of roulette. You just don't know what you're going to get, right? Like when the inspector comes back, it's like, well, is this going to be a horrible, like, you know, red light that's going to cost a deal? Or is it like, you know, all cosmetic, no issue at all? And because there's no standardization, you know, you get this like huge stigma around negativity that comes with inspections because it's just not standardized.
That's interesting. So I've kind of thought of it as, you know, the way we think of home inspections now, I've thought about it more from the buyer's, you know, viewpoint. You know, it's really something for the buyer to make a good decision. And, you know, that's pretty common to have that as a contingency on any, you know, financing. But if you're standardizing this thing, does that mean you have different types of clients that aren't necessarily the home buyer? So,
Yeah,
who are your customers, I guess, is an easier way to ask that question.
Fantastic question. You know, when we started the business 3 years ago, it was our customers were traditionally homeowners or agents going through the normal purchase, right? And what we've realized over the last 2 to 3 years is there are literally hundreds of touch points that happen over the life cycle of the property where data is needed upon that home to make some type of decision, right? And so the purchase is a tranche of that, but who is purchasing the home can vary, right? It could be a homeowner, a first-time home buyer buying the home. It could be an institutional REIT buying an investment property. It could be an investor that's looking to do a quick renovation and sell. So the use cases are pretty diverse even within the purchase. But if you move outside of purchase, you know, we help insurance carriers on capturing data to understand the risk for an HO3 policy. We work with property managers to understand the condition of the home before a tenant moves in, to make sure the resident has a great property to move into and everything's in working order. So there's lots of other use cases we can tap into, but you know, that initial home inspection is the most robust, and it was the main reason we started there. But our customers are coming all different shapes and sizes, which is fun.
So you're driving demand through the customers who want the standardized property data, that want, you know, that kind of more consistent output. But obviously you're working with a pool of folks on the inspector side who, just based upon all of us who've interacted with inspectors, we know that's a group that's probably a little bit old school in their methods, let's say. Is that fair to say?
Well, I mean, if you think about the industry, it's been around since the late 70s. And so you're having kind of a transition of the guard. I think we're seeing in a lot of transactional industries right now where, yes, you have kind of old school guys and gals that, I kid you not, still write inspection reports pen and paper when they're doing inspections. And then you have kind of the newer guard, which are not necessarily young folks, they're just young to the industry that are taking a more modern flair to it. And I think that's the common trait that inspectors that gel well with Inspectify. It doesn't matter their walk of life, their age. Like the common theme is they want to grow their business. Like that's the common theme we see. And they could be inspectors that have been in the industry for a while and just looking for a new way to diversify, or it could be a guy or gal that just got their license in one of those 37 states and is ready to turn their business on. So there is some kind of old guard with that, but we are seeing a pretty healthy refresh of either old guards converting into the new guard, or just new folks altogether jumping in the space.
That's really cool.
Cool. So how do you enable those folks? What's some of the benefits, I guess, that you provide to an inspector looking to grow their business? What is it that you enable them with?
Yeah, so if you think about the average home inspector in the US, there's about, depending on who you ask and how they count and what time of day you ask them, there's between 30 and 40,000 home inspectors in the US. And the majority of those home inspectors are mom and pops or sole proprietors, right? And so they wear multiple hats. They are sales, accounting, marketing, customer service, and the thing they're actually trained to do, which is doing the actual inspection, right? And so with Inspectify, we take care of everything else, and you just focus on doing the inspection. We take care of giving you the business, we handle payments, we handle customer service, we handle all the technology, and you're enabled to do more with less effectively on the platform. If you also think about the role of the inspector, especially if you just take the lens of helping somebody buy a home, which is where we started, it's kind of hard to get into that space, right? Like you're kind of going from brokerage office to brokerage office and bringing donuts and trying to beg them to like present to you to their clients, because there's really no direct consumer option out there, right? Consumers are typically looking to their agents or other platforms to give them a good inspector. And so for either a new inspector trying to grow their business or an existing inspector that wants to expand their offering, we're by far the most cost-effective and easiest way to scale their business, right? The average inspector on our platform, about 40 to 50% of their business comes through us. So we're able to give them a decent amount of volume to not only keep themselves busy, but we love to see inspectors do this, but they hire more inspectors. And so like their teams get bigger and bigger, which is always exciting to see our partners succeed in that way.
Yeah, so you guys have been around for about 3 years, you said. And it seems like in the last, I'd say, probably 12-ish months, your guys' profile has kind of ticked up. You guys have had some nice press coverage. I believe you just won a pitch battle of some sort. Congratulations. What conference was that again?
It was T360. They somehow, I don't know, maybe they weren't paying attention, but they squeaked me by and let me win. So
was it sort of like an 8 Mile sort of thing where you had to have a
rapping?
Yes,
rap
at the
on
next
stage?
at the next podcast we can do that. That sounds. We were joking about this before about what's the content here. I like that. You should do valuation services rap battle. That sounds good.
On spaghetti. Sure. So what's kind of been what's been sort of the trigger for you guys in the last year where adoption's picked up? It seems like you've found a little more product market fit. Like for people who are on that journey, what are some of the things you've found that have helped you?
Yeah, it's interesting. I'll give you an idea of like what our journey has been. When I started Inspectify, the first product I built was report writing software. And my initial idea was, if I can just give great modern software to inspectors, they'll go and capture all this data and I can standardize and do a lot of cool stuff with it. Well, the reality is, like, yeah, I got inspectors use my platform, but they wanted to make it their own. They wanted to tweak it and change it. So standardization was completely out the window. So I had to pause and kind of throw that out the window. And so I went back to experience I had at Fly Homes, which was, at the time, we were doing about 150 transactions a month. And I had a team of 5 people that just managed inspections. That's all they did, was just like the calendar Tetris of aligning the buyer, access in the home, and a good quality inspector took 5 headcount just to manage that process. And I was like, well, that's a pain in the ass. Sorry, I don't know if I can cuss or not, but we can bleep that out later. Or the trombone sound, even with the trombone sound being incredible. But it's like, that's a huge pain in the butt, right? So I could solve that. And so that's what we did. We built this booking platform that brought in a network of inspectors and took all the monotony of that counter Tetris off the hands of the brokerage and gave that service basically away for free to agents. And so we started scaling that, but the interesting thing around inspections, it's still a very hyper local business, right? And so unless I'm giving 10x return in value to an agent, it's hard for them to switch from their current process, right? And so when I'm just simply making it easier for to book an inspection and you're doing 10 inspections a year, that's not 10x better. But what we've done in the last 12 months and what really has drawn a lot more volume and thankfully good press from it, is because we now have enough of a base of demand in our platform, we can start to standardize that. And once you have that data set standardized, you can do a lot of really cool stuff. That is more than just making inspections booked easily, right? So if you do an inspection through us today, we give you cost data on all the deficiencies that are found, right? You don't have to go call a bunch of contractors and understand, is this a $20,000 repair? Is this a $5,000 repair, right? So because the data is standardized, that's programmatically taken care of. It's easy peasy, right? We also, because the data is standardized, we now provide you the make, model, and serial number of every appliance in that home. So you understand what's the recall status, what's the remaining life, right? So you just get so much more information than you do from your inspector down the street because of the standardization that we drive. We're doing some cool stuff with Clear and Cubicasa around how this could feed into appraisals as well, right? And so like the more and more that it becomes not just an inspection, that equation becomes much easier for an agent, right? Because I'm a firm believer that it can't be 2 times better, it can't be 5 times better. It has to be a 10x better increase in experience and improvement to drive adoption here. And I don't think we're quite there yet, but we're definitely getting closer. So.
I guess that makes me think about, I mean, if you're discovering the uses for the data, you must also be discovering some of the pain points that are maybe not as obvious, but are there because of the current lack of standardization or a lack of consistency. I mean, certainly, obviously in the appraisal world, I mean, that can lead to the difference between someone getting, approved for a loan or not. But what are some of those things where you're really seeing the potential impact on people, on home buyers, because the inspection process isn't as dialed as the solution that you're bringing to bear?
Yeah, I feel when you don't have a standardized, think of just like system dynamics. If you don't have a standardized input variable, the output variable is never consistent, always wrong, right? So it's like, maybe like, I'll make that non-MIT speak. Garbage in is garbage out, right? It's a good way to think about it. And so if you have a bad product that the buyer has to make a decision on, they're going to make a bad decision, right? Which might be, I buy this house and I shouldn't have bought this house, or I didn't buy this house and I should have bought that house, right? Either a false negative or a false positive. And so I always tell folks that the perfect inspection report is one that empowers and educates the homeowner to make a decision on that house, right? Like the job of the home inspector is not to tell you you should buy this house or not to buy this house, because we all have different spectrums of risk, right? I've got 3 kids at home. I'm not going to buy a house with lead-based paint because they lick the walls. I can't handle that. No, but like if you're a single guy or gal and you're going to, do some house hacking, as the kids call it, you probably want that. You want that house that you can fix and repair, right? And so, yeah, exactly. And so, I think the really cool opportunity here is, a lot of buyers of the last 12 to 18 months, with how crazy the market has been, like they're getting into these homes and they're getting this sense of remorse. It's like, what did I just go through? What happened? Why did I? And so we want to fix that. We want to have folks feel like they're showing up in the closing table and sign on that dotted line. And they're like, we feel excited about this house. We know what we're getting. Yeah, there's some work to be done, but like we have a handle on it, right? And I think that's a true opportunity with the standardized inspection report, is just make them feel more confident at the signing table and not just rush into a decision that may be good or bad. So
it's really important when you think of this bright, shining future you're creating, that you have that kind of aspirational, emotional vision in your mind of like, what is the outcome I'm creating for people? I think that's super important. So converting that into like, what does the next year or so look like for you? Like what are you guys working on next to really push towards that 10x experience?
Yeah, I think, from a product perspective, we now have our own report writing software out there that inspectors use. So we're at a point now that it doesn't matter if it's inspector A or inspector Z, you will get the same output. there is some variance still baked in that we have to fix, right? There is still opportunities for inspectors to make a mistake or misunderstand that software. So there's additional conditional logic that we're putting in to make that product better and better and better. And so if I think about my my secret evil plan here at Inspectify, we all founders have to have a secret evil plan. Step, maybe not evil. Maybe.
What you're recording right now, we're going to try to distribute to as many people as possible, which is great. I love
maybe
it.
put another trombone sound over when I say evil. That'd be helpful. So step one is like make inspections, the process of booking inspection as stupid easy as possible, right? So that was our initial step. We've done that. We think with integrations we have with showing time, like you can literally click 3 buttons or just programmatically send me an API feed and the inspection will be taken care of. So I think we have the easiest way in the world to get an inspection booked right now. Step 2 was create a standardized output and make it consistently a standardized output, right? And that's what we've done with the software, but we're not quite there yet. I'd say we're doing an okay job at that, but there's still a lot more for us to do to make that a standardized output. And so we'll continue to put effort into that. And then step 3 of that secret evil master plan is how can you create that standardized output and create exponential efficiencies out of that, right? And so, what we're doing on supporting on the appraisal side is a component of that. We're doing some really cool stuff with insurance carriers on having this be fed into an HO3 policy or a home warranty. We're talking to a lot of home energy efficiency brands to be able to take this data set to help you get the right incentives to replace with the right equipment. So there's so much opportunity to kind of create the plumbing between this data set and the different folks that need it that continue to create more and more utility. And that's what I get most excited about. But I think as a founder, I just need to, and my other co-founder, Denny, always keeps me honest on this. Like you kind of have to, take it one step at a time. And like, if you rush to making all this data connections and all this cool utility, but the data is crap, it's classic garbage in, garbage out, like it's all for naught, right? So we've got to make sure that second step is as good as possible while still laying the foundational work for that last step, which is where things get really, really cool, I think.
Yeah. All right, one final question for you. As a now co-founder, after going through the experiences that got you here, and any advice you would give to another startup, someone looking to jump in and being a founder, and any life lessons that you would want to pass on?
Yeah, I think it's interesting. I was just talking with a former employee of ours. Like you could always find an excuse not to do it, not to jump into it, right? And like I had that excuse. Like I graduated from business school, and I'm going to take 10 minutes to answer your question, but it'll be a fun story. I was graduating from business school, and I made my wife, or fiance at the time, move to Boston. So she had to pick up her life and come to Boston. So we had this spoken agreement that she got to pick wherever we wanted to go after business school. And so I got all these cool offers, and she picked Seattle. I had no offers in Seattle. So I turned down 15 offers and moved to Seattle without a job. And I was like, cool, I'm going to start a company. This is it. I'm going to go do it. And then I was about ready to jump into it, and I found out we're having our first kid. It's like, oh, I need to get a job and support. I had this like very Midwestern, like, going to put food on the table, even though my wife had a very good job and like we would have been fine. I just had this weird Midwest. And so I had this excuse not to do it. And then I went, which it worked out. I went to Peach, which is where I met my co-founder, and it was fine. But then I left Peach, and I was going to start another company. And what do you know? We found out we're having our second kid. And it's like, oh, I got to put food on the table. And so then I went to Fly Homes, which worked out as well. But the reality is, like, I delayed starting Inspectify 3 to 4 years because I had just some reason not to do it, right? And I think if you look at the market today, like every day, every week, it's something negative in the news. And it's like, now is not the time to go start a business. It's the exact opposite. Like now is the best time to start a business, right? This is all the best brands ever built started during a downturn, right? The .com burst created Salesforce, Google, Facebook, all the big brands. So now is the time to jump into a tech company, and you can always find an excuse, but I don't know. Now's the time. There's no better time. Like there's this thing. Is that the curtain call? Like,
Oh,
you're done, Jeff?
That was supposed to be a celebration of your point, but I thought you were done. So my apologies. I messed up the timing.
That was incredible. Oh, I think that's a curtain call. Oh, that was probably a much better ending than what I was going to do anyway. So I'll go with that.
It was good.
Amazing.
I'm sorry, Josh.
No.
I'm sorry. You're our guest, and we're treating you like this. It's just we're terrible hosts.
Well, I was inspired by your words. No joke that I felt I needed to like amplify or boost the positivity further with the trombone. But your point, I think, is very incredibly made. Like, if you had a startup in the last couple years when money was easy, like it's a different environment and it's a different crucible or pressure that you're under. And it actually probably there's a lot of companies that got easy money and didn't necessarily like really build something that had market value. And like, so right now, if you're going to build something and you're going to be successful, it better have market value.
Yes.
It's a great
completely agree. Absolutely. Absolutely.
You kind of saved yourself, Jeff, but you know.
No.
Well, on those notes of freedom, Josh, thank you for being on the show and tolerating Jeff and I in life and in this episode. And like, yeah, no, seriously, though, we do wish you the best with Inspectify. We're excited to see where it's going to go, and we actually do support you despite what
We actually do.
this episode would.
No, I love it. I've never been cut off by a soundbite before, so this is a highlight of my short and limited podcast career. This is a highlight. So
Podcast bingo. That's free right there. Yeah.
Awesome. Thank you.
Awesome. Appreciate it.